I guess we've been doing that for a better part of a year now, right, Scott?
Yeah, but why aren't we changing yet? Ed Yardeni said you could get 15%. Why is it a head fake?
Yeah. So, the roadmap that I laid out at the beginning of the year, we still haven't completed it, Scott. At the end of the day, yes, most of the Fed hikes are behind us, but we still don't have agreement, even as recently as a week ago or 2 weeks ago, on what the Fed's going to do in November. And they've all but laid out the fact that they're going to get to that 4.75 rate, if not a 5% terminal rate. I was hearing whispers of that 3 weeks ago, and now that those whispers are a little more public. The estimates are still way too high, Scott. What we saw in the third quarter, the beginning of the quarter, is that earnings expectations were about 10% growth, 9.8 to be exact. Now we're at 1.5% for the quarter. I believe that the fourth quarter, which started around 7%, now is down to around 4%, needs a similar downward revision. And think about that for a second. Next year, 2023, even if you just believe that the economy stays flat, that no further deterioration occurs from here, which we know is not the case because the actions the Fed is taking have a lag effect. But at the end of the day, even if you just believe flat, that means that 2023 earnings estimates need to come down 7 percentage points. And equities just aren't safe in the wake of those headwinds, combined with the macro global turmoil, combined with us being at the beginning of QT.
What about the idea that at least now you have a debate, perhaps, in the room? You got a hawkish Harker and a dovish Daly in the last 24 hours, all sort of making their cases on where they see policy perhaps going from here. So it's no longer a one-way road. Does that factor into anything that if I told you, okay, 75 next month, 50 in December, and then we'll see, that doesn't change your view at all?
It doesn't change my view at all, because as soon as we get the relief that they've reached the 4.75 or the 5%, wherever they think the terminal rate needs to be, we're likely to stay there for a while, Scott. Remember, the thing that's going to make them pivot, we need to see one of three things. We either need to see the labor market approach 5% unemployment. We need to see a major contraction in the economy, which we haven't seen yet. So I'm talking about 3% or north of that. Or we need to see inflation come down by about 200 basis points. We haven't seen any of those things happen. And so we can't even begin to think about a true pivot, which would be cutting rates, until we start to see some traction on one of those three things. And we just haven't seen it yet. So we'll just remain in a... Go ahead.
But maybe a pause is enough. Maybe just a pause is fine. We don't need a pivot.
I think a pause will be fine in the short term, and then we'll get another head fake rally like we got in July, like we got 3 weeks ago, and like we're seeing right now. At the end of the day, yes, it will bring a sentiment relief, and then we'll start to pull our pencils out and do the actual work and forecast what those heightened interest rates mean for consumption, what those heightened interest rates mean for the growth in the economy and the growth of corporate earnings.
So tell me then how you see next week. Tell me how you see next week shaping up with these critical earnings ahead, big tech, make or break?
I don't think it's make or break, but I think en masse, the news will be more disappointing than I think people are expecting right now. And remember, we have some of the few safe havens that I saw in equity land reporting next week, and I expect some of those reports to be disappointing. Remember, cloud was something that I have always articulated as a safe haven, given the constant, consistent growth that we're seeing, given relative insulation from the inflationary pressures, and given the margin expansion that they've been able to continue to show. However, what throws a kink into that thinking is if we have decreased consumption and decreased IT spending, that will make growth decelerate even a little faster than I anticipated. So I think they'll come in line, but they will talk very worrisome about the coming quarters, I believe. I think we'll see the same thing in digital advertising, aside from search. I think we'll see the same thing in PC and chip.